What's up guys, John here. The FDIC seized another bank on Friday. New changes for this bank go into effect today.
The bank behind me here is no longer the First National Bank of Lindsay. That's because a federal agency shut them down, saying they had false and deceptive records.
But what many people don't realize is what is very likely going to happen next. I was playing with Google AI Overview, asking them what the future of banking will look like. How many banks will actually exist in 2025? The answers I found are pretty shocking. You start to kind of look at what Warren Buffett's doing, unloading Bank of America stock.
Warren Buffett's selling spree of Bank of America continues.
Then you look at what happened in 2020. In 2020, banks no longer had to have any reserve requirements. So they could essentially lend money out through the gills, and they didn't need to have a dollar in their own reserves to protect the bank. Pretty concerning, right? When you look at the FDIC, they only have $129 billion in their insurance fund, insuring 17 trillion worth of deposits. So you think about this, they have less than 1% of deposits that they can actually insure. Do you think they're going to be insuring Main Street? Do you think they're going to insure Wall Street when things hit the fan? I think you know the answer to that. Well, in this video, I'm going to show you exactly what's going on and why I think we're walking into a major structural change. And I'm going to show you what AI Overview is telling us is going to happen next, because if it were just me or anybody online or on television or anywhere telling you something, you might say, okay. But then when you start looking at what AI Overview is saying, then you start matching it with the biggest real estate investors, the biggest billionaires in America, and you start to look and connect the dots on what all these very wealthy and powerful people are doing. Facts are facts. It makes the most sense. I think we're walking into a major change coming in the next 6 months. And why the next 6 months? Well, the Bank Term Funding Program, which was essentially a line of credit, $165 billion line of credit that went out to 1,804 banks. That line of credit expired on March 11th of 2024. They have 365 days to pay that money back from the date in which they took the loan. So they had that 1 year period. So all of these banks, you have to pay back all of these loans, in about the next 6 months. And so a lot of these loans they took were based on commercial real estate and assets that they held that have eroded in value since when they took out that loan. They got 100% loan to value. So they got a full $100 million check on a $100 million building, hypothetically, from when they lent that money out maybe in 2017 or 2018 or 2019. And this was allowing them to not assume any loss from when they took out that loan from the Bank Term Funding Program. Maybe the $100 million building was only worth 50 or 60 million, but they still got the check for 100 million. Now that 50 or 60 million dollar building might be worth 40, might be worth 30, and they have to write a check for 100 million to the FDIC. How many of these banks are going to be able to issue these major checks? I don't think many. I think we're walking into a major consolidation, and I'm not alone on this. Many people and many wealthy people are saying the same exact thing, that this is what's going to unfold. I'm going to break it down for you. I'm going to give you the facts. Please hit the like button. When you do, YouTube will share the content, educate more people about what's going on in the U.S. economy. Today's video is sponsored by ITM Trading, but more on that in just a little bit. Take a look at this. The federal agency closed the Oklahoma bank citing false and deceptive records. Citing false and deceptive bank records and other information suggesting fraud, the Office of Comptroller of the Currency on Friday closed the First National Bank of Lindsay. The OCC then appointed the FDIC Corporation as receiver. The FDIC announced in a news release it entered into the purchase and assumption agreement with First Bank and Trust Co., Duncan, to assume the insured deposits of First National Bank of Lindsay. Starting Monday, the First National Bank of Lindsay will reopen as a branch of the First Bank and Trust Co. Depositors of the failed bank will automatically become depositors of the First Bank and Trust Co. According to the FDIC, the insured deposits assumed by the First Bank and Trust Co. will continue to be insured by the FDIC. Now, FDIC, they have $129 billion as of second quarter of this year. All right, $129 billion. There's $17.76 trillion in total bank deposits. Then, this is less than 1% of all deposits they can insure. In March of 2020, the banks in the United States were no longer required to have any money at all. You start to think about this house of cards that we're living in, right? No money at all. And since mid-July, Warren Buffett has been selling Bank of America stock, over $10 billion worth of shares. Why would he be doing that? Why would he be selling all of these bank stocks? And a lot of bank stocks have been getting pummeled And the reason for it is there's trillions and trillions of dollars worth of commercial real estate loans that are owed to these banks for the next couple of years. There's a lot of obligations that these banks are, likely not going to get fulfilled on. And they're going to start seeing delinquencies and defaults skyrocketing. They're going to look at their entire business models and say, hey, look, we have, 1,800 branches or 5,000 branches, whatever the number may be for that specific bank. And we're paying all of these staff, all these employees. Do we need to? When our customers don't have any money, we can't issue them any loans. The loans in which we did issue, we're not getting paid back on. We need to, start to consolidate. And that's what I think is going to happen. We're going to start seeing a major consolidation of bank branches throughout this country. And it's going to happen very, very quickly. So, Warren Buffett, Big Short, Michael Burry, they're selling Apple and buying gold. Now, I've been talking about gold on this channel. I'm not some crazy gold bull, but I've been talking about gold on this channel for 2 years, maybe 3 years, saying that what I think is going to happen is I think overall we're going to see a major pullback on the US dollar. And I think we're going to see a lot of investors and a lot of central banks starting to take some risk off the table. And they're going to start investing into precious metals. I really believe that. And we have been seeing gold take off. And I think that is probably the beginning of this. I think, of course, there's going to be peaks and valleys. It's not just going to be a straight rocket ship to the top. But I do think we're going to see gold doing quite well over the next couple of years. I really do. And I think we're going to start seeing this de-dollarization continue to grow. And I think we're going to see the U.S. start to turn their money printers back on at a faster rate than we've ever seen in the past. As we start seeing these banks start to fail, it would not surprise me to see universal basic income pilot programs starting to, expand more broadly. Stimulus checks beginning to, become more and more common. And I think we're going to start seeing all of these things, major corporations getting massive bailouts greater than 2008. I think we're going to start seeing all of these things. And these other countries are going to see the writing on the wall and say, you know what? Why am I buying bonds? Why am I investing in America when they're just going to continue to erode the purchasing power of the investment? I'm going to start taking risk off the table. Now, that's what I think is going to happen. I think we're going to start seeing gold take off. So, and it's not just me. You have Zuckerberg. You have all these major players, John Paulson, all these billionaires investing in gold. Why do you think that is? Do you think it's because they're looking at the return on their investment, trying to buy some stock or trying to buy some investment? Or do you think they're looking for a return of their investment, which is what I think they want? And gold, I think, is a really, really solid investment. Long term, historically speaking, it might not be some, 20, 30 extra, like, some people are accustomed to the last couple of years with crypto, but I think it will be steady and I think it will be stable. And I think that's what a lot of people are looking for. And if you are thinking about investing in gold, you should check out ITM Trading. I've been communicating with them for quite some time, probably a year or so. Really, really, really great guys over there. I mean, people that I would consider friends. They're very easy to talk to. They're not pushy salespeople. I just personally like them. So if you are thinking about investing or even just looking at the idea of potentially investing in the future, maybe a year from now, 6 months from now, you're just not sure what you want to do, I'd hop on a strategy session with them just to learn what your options are. And if anything makes sense, then great. And if anything doesn't, then, you leave a smarter person with more information than, when you started the call. So for more information with ITM Trading, you can click the link in the description just below this video to schedule a call. Take a look at this. How many banks will there be in the United States in the next 5 years, right? They're offering predictions about the number of banks, right? So they're saying these are the differing predictions, but they're all essentially the same prediction. They say one prediction is that there will be about 30 national or super regional banks in the U.S. in the next 5 years, with each bank having at least $450 billion in assets. The top 100 banks will control more than 95% of industry profits. Another prediction is that 80% of financial institutions will either go out of business or be rendered irrelevant in the next 5 years. However, some say that banks are the core of most economies and are not going away. Forrester predicts that banks will be invisible, connected, insight-driven, and purposeful in the next 5 years. Banking industry is facing challenges and is adapting and innovating some trends that are shaping the future of banking. Now, they're saying digital banking, new technologies, you're talking about AI here. But what's fascinating here is the bank Bank of the Future 2030, invisible, connected, insight-driven, and purposeful. Will banks still exist in the future? Traditional banks may not exist by next year, right? Now, am I saying that's going to happen? No, but am I saying that we're going to see major consolidation and bank failures in this country to levels in which we've never before seen unfold right before us very, very soon? Definitely. There's just no way it doesn't happen. JP Morgan Chase is winning the AI banking race, and it's leading, and its lead is getting bigger. Now, if you look at Project Bora Bora with Citigroup, they're looking to move heavily into AI. They've already committed to firing 20,000 employees. You look at JP Morgan Chase, they're expanding. They're offering all of their investment advisors, their wealth managers, their team members an AI assistant. Essentially, in my opinion, I think they're doing that so their employees can essentially train the AI. And then once the AI is adequately trained, then they can release these employees from the positions. But you start to look at this, you're like, okay, well, this is the direction and where we're going. Then you look at bank non-owner occupied, non-farm, non-residential loan past due non-accrual rates. So you look at their delinquencies and their defaults skyrocketing. Someone commented here, first comment, yes, looks like the delinquency rates are highly concentrated in consumer loans and consumer real estate. Notice what we saw in the pattern in 2008, right? So it's the same pattern in 2008 here, 2008, 2009, boom. And this is what is starting here. Now, big banks, 7 minutes ago, big banks are bracing for losses. Americans struggle to pay off debt. Here, this bank term funding program is, I think, the greatest rug pull ever. Because you think about it, you issue 1,804 banks, 165 billion, and they have to pay back all of this money at a worse point in the economy. There's no doubt that a year ago, consumers were more optimistic about the future than they are right now. Same thing is happening with all commercial real estate. Essentially, the entire sector of the economy around real estate is less optimistic than it was a year ago. And a lot of these loans were issued based on those 100% valuations that the loan was initially originated on. Now, these bank term funding loans, $160 billion right here, $168 billion to 1,804 banks. This is Reuters. This is what's actually happening. Now, the CEO of Starwood Capital, they're probably top 3, top 4 biggest real estate investors in the country. The CEO, made a prediction saying that you're going to see at least one bank failure, possibly 2 every single week. That's what his prediction was. And he says that there's $1 trillion in losses on just office properties. 70% of those losses are held by regional banks. Regional banks control 70% of the entire office sector in America. So you start to look at how consumers are already getting hit right now. Consumers, they're buying houses less and less and less. It's harder to get loans. Mortgage interest rates actually are going up, not down, during this, quote unquote, Fed pivot. And it's just going to put more and more and more pressure on these banks because of this. American office delinquencies are shooting up. So they claim that delinquencies right now for offices are 20% vacancy rate across America. 20%, the highest since 1979, according to The Economist. Now in 2010, 11, 12, all the way to 2020, vacancy rates on commercial properties were sub 10%. 2017, 2018, 2019, we were seeing 5% vacancy rates. So when you have a scenario where now it's 20% and all these investors are buying it at a 5% vacancy rate, let's say there's 100 units inside of a building, 100 units. Before there'd only be 5 vacant, now there's 20 vacant. And then insurance has went through the roof, taxes are going through the roof, repair costs and maintenance through the roof. What is that going to mean? It means the value of these assets are getting ripped from them. I mean, you're talking substantial discounts because these assets are only worth the income that are generated from them. And so what I think is going to happen next is this major shift where these regional banks that are going to go belly up, and a lot of these banks that are walking into big trouble, they're going to look to offload these loans. And who are they going to sell them to? The BlackRocks of the world, the Blackstones of the world, these major companies. And what they're going to do is they're going to buy them for pennies on the dollar, and they're going to find ways to convert them from office to residential, because they're not just going to let these office buildings sit with 20, 25%, 30% vacancy rates in the future forever. They're going to try to find a higher and better use for them. Now, I've been talking about this on this channel, and many people would say in the comment section, John, you don't get it. It's going to be way too hard to, turn those office buildings into residential because, changing the floor plate of these properties is going to be impossible. And, parking requirements, all these different things. Look, in the future, they say that most people won't own a car. So the parking requirement is going to be less important. The key locations of these properties are close to public transit, which is what they want. I've read even surveys that are being done right now where they're saying, what about the possibility of using communal bathrooms where an entire floor would share maybe 3 or 4 or 5 bathrooms and there might be 20 units or so on that floor, right? We could start seeing that type of living standard where those apartments are essentially subsidized by the government, like a Section 8 type of affordable housing program where there's low-income housing tax credits for developers to be able to facilitate these projects. For example, White House wants to supercharge the office to housing conversion effort with over $35 billion in below market rate loans. This is Fortune magazine, see right here. So this is what I think is going to happen. These banks are going to be offloading this inventory. And in the process, tons of banks are going to be going under. According to the data from TREP, approximately $2.2 trillion in commercial real estate debt is expected to mature and needs refinancing by 2027. Now, commercial property, it's very different than residential property. Residential home loan, most cases a 30-year loan. So you get that loan, you pay it off, and in 30 years, it's done, right? Well, with commercial property, every 3, 5, 7 years in most cases, you have to go back to the lender to get a new loan. And the lender is going to look at the cash flow that's coming in compared to when you bought it. And so if the cash flow is going down and the expenses are going up, they're going to want to lend less on that property. And in most cases, it's going to be hard for these investors to hold on. And so these deals are essentially just going to get rolled up and sold to the highest bidder. Now, America's retailers, restaurants, the same thing's happening right now. It's across every sector though. Like the job market's in trouble. Right now, they say the layoffs are worse today than in 2008 in some ways. So what do I think is going to happen? I think we're going to see a lot of change unfolding in banking, a lot of change unfolding in America, and a lot of opportunity to those investors that are prepared. What do you think about this entire situation? Let's have a conversation about this below. And for more information with ITM Trading, you can click the link in the description to hop on a free strategy session. Catch you next video.